Hi everyone, welcome to the webinar. We just realized that you were probably listening into our testing of the audio. So I do apologize for that. Are you okay there? Somebody's saying the audio is poor. Could you all just, if possible, just tell us whether the audio is coming to you loud and clear, if possible? Brilliant, thank you, thank you. So if you are having some poor audio, perhaps just check your own computer settings if you don't mind. Lovely, thank you. I think it's all David's fault. He pressed the start button by mistake. Anyway, great to have you with us. First time I think we've done a Monday morning for some considerable time, but it's just nice to mix up the days, and it's been an interesting start to the week. Those of you who have already been at your screens for some time. But before we go and have a look at what has been happening on the market more closely, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And obviously, as always, we are going to be looking at the market through the prism of volume price analysis. That's the chart analysis. But for those of you I can see who are on our program, who've read the books, will know that is only one element. We also look at what's going on the fundamental landscape, and of course we have a look at related markets. We see what are these influences from a cross-market perspective. What sort of influence are they having on currencies? And it works both ways. There is this sort of symbiotic relationship between currencies and other markets. They do sometimes provide the driver for the currency, and on other occasions the currency can actually highlight what may or may not happen in another market. So it's it can sound a bit complex, but once you know what you're looking at and what it is you sort of have to try and pay attention to, it does actually become much clearer. Volume price analysis, again, those of you who have the book, who've got the program, will know it's premised on this very intimate relationship between volume and price. What we have done, we have taken this relationship and we've added things like candles, candle patterns, and support and resistance, and that is your core methodology. That is what you get to grips with that, and then on top of that you can add your indicators, whether they're standard indicators or if you are in the program and you've invested in some of our quantum tools, you will know that we've developed specific ones. These are specific to the Forex market, but all the others all have their they are linked to some elements of VPA as well. But the Forex market, it is, first of all, you're trading a pair, and what you want to do is you want to try and deconstruct where is the money flowing to, which current individual currency is being bought today, which is individual currency is being sold heavily, and then you want to have a look at the pairs and how that buying and selling is reflected in the pairs. And I've got a fantastic example of what's been happening this morning with, in fact, let me just go and have a look at the overall profile for on what we call, this is what I call my dashboard, and that is 3 time frames where I have the CSI, currency strength indicator, which looks at individual currencies, and as I said, what's being bought heavily, what's being sold heavily. I've got the hour, I've got 15, and I've got the 5. This is my MT4 platform. David has got, he's got all sorts of platforms today, haven't you, David? You've got TradeStation, he's got the Trading View, he's got Ninja as well. But I've just got my little Trading View platform, which is great. Suits me. That's fine. 3 time frames, and the hourly one here is, I always find extremely useful because it's not too far back, not too far forward. We get an overview of what's been happening, what the market has been up to in terms of the buying and selling, and we can see that by the flows into the individual currencies. And we can see here, this is the green line, which is the Swiss franc. We've seen some very, very strong selling. Why do we know it's strong selling? Well, the angle of the line, if you like, we have a look at that. Then we look at the matrix. What the matrix does, it takes all this information and then compiles, if you like, a scoreboard, a leaderboard, a bit like the golf, if you like. And it tells us the pairs. So we've seen that there's been strong buying of the Swiss franc, but is that across all the Swiss franc pairs, or is it sort of scattered about, as it were? And we can see here on the hourly, it's pretty consistent. The weakest, if you like, is the Aussie Swiss. Then we've got the dollar Swiss, etc., etc. We've got the pound Swiss, and we've got the Swiss yen. Because obviously on this one, the Swiss is the first of the of the pair. So we can see there's been fairly consistent buying of the Swiss franc. And what does that tell you? Well, how do you use this information? Well, first of all, you can either use it on the basis of, if you are a trader that likes to trade anything, you're just looking for a trade, that's where your eye would be drawn to, and you think, oh, okay, well, there's obviously markets, buying Swiss franc, where is the best opportunity for that? If you don't trade like that, and you have a little portfolio of pairs, and your pair isn't in what's going on at the moment, what it actually tells you, it possibly tells you that maybe there isn't a trade to take in your preferred pair. So let's take an example. Let's take that off for a minute. Let's take an example. Oh, I don't know. Let's take something like CAD yen. Here we are. So we look at the CAD yen, and we can see the Canadian here is kind of turning up. The yen is being, looks like it's a bit of a sell on the yen. But the other thing about the ranking on the matrix is two things. First of all, it tells you, which of the pairs are moving, which is great. So we know there's some action in the ones at the extremes. When they're at an extreme, well, they will, at some point, they're going to reverse. And or are they going to carry on further, which they do? Perhaps there'll be an opportunity to go in on some kind of correction and pullback. But more interestingly, with this particular indicator, is you look at the values. This is the hourly chart, don't forget. And the values for the hourly chart on the matrix, they're not particularly high. I know that because from experience, because I've been using this indicator. What we've done with the indicator now is basically upgraded it, whereby the value that is recorded at the extremes, traders will be able to tell whether that's high, medium, or low. It's something that's available on the TradingView version of this indicator, and it will actually be rolled out on all the others. But from experience, at 26 and 25, it's not fantastic, But does that mean there hasn't been a trade? No, of course not. There has been a trade. The other currency, as I said, knowing that is the other currency, because it's the London session, is I always look at the British pound. I mean, you'd be foolish not to include at least one sterling pair in something that you trade, because it's been given us some fantastic opportunities over the last 4 years now. And it looks like there's been a bit of sell on the British pound. But what's interesting is if we look at the dollar, you see the dollar is moving lower and the pound has been moving lower. So I've actually looked at the pound Swiss and the and cable, and it's really to kind of highlight where, although there's been strong, the dollar has been, sorry, the pound has been selling, and the Swiss franc has been bought. And whilst cable is the more popular, if you like, of the sterling pairs, primarily because of spread. The spread, I don't know what the spread on the pound Swiss is, but I suspect it's not as competitive as on cable. But it's also a really interesting example of how you will get a movement in the sell of one currency. It will be stronger in one than in the other, and we know it's going to be stronger or smoother in where you have this divergence, as we can see here, between the Swiss franc and the British pound. When these lines are moving together, it does tell us that to expect some consolidation. It's going to move, but maybe not as much, and you may have to be a bit patient, because if you get a very strong selling of the British pound, and that really takes off, you will then get a kind of rotation. So if you like, it's the market says, right, we're going to sell it against this currency because this currency is being bought very strongly. It's against this other currency which, you know, we want to sell it against, but it hasn't, not quite so strong. But maybe that will happen later on in the session, and that often happens with cable in the morning. Sometimes it doesn't look as though it's, you know, has a bit of a burst at the open, doesn't go anywhere, but it's being sold, and then it will kind of catch up maybe against you know, maybe if we can see here what we've got some nice divergence coming up on the pound New Zealand, and we've just got a cross now on pound Aussie. And if you look at where pound Aussie is in the center, where is it? Where was it? It was here a minute ago. Where's it gone? There we are. That's it. When I looked at it a few minutes ago, that was, I know the value of that was about 8. It's now dropped to -3. So because we've got a cross, we've got a bit of a movement. So what we do is we're tracking the flows, if you like, into the individual currency. Then the matrix helps us to put those, you know, combine those flows into the actual pairs. Right, that's that. Very quickly. And I'll just show you what my profiles look. British pound, so I say, here we are. There we have this, that one. I've actually also got the pound, the dollar up. Now for the dollar, it's the thing to a couple of things about the dollar I just want to highlight for you. The dollar is one of the most heavily shorted currencies currently on the CFTC, and when you get a very heavily shorted anything, GameStop, a currency, you can expect what's called a short squeeze, and that seems there's a bit of a narrative going on about that at the moment. The other thing with individual currencies, you as a trader, we all look at charts, we all start with chart reading. What I said about the fundamentals, check the fundamental calendar. There are, I don't know how many Fed speakers up for Wednesday today. It's absolutely ridiculous. Let's have a look. I found it on my Twitter feed. Here we are. This is what's happening today. Well, we've got Powell, we've got Barkin, we've got Daly, we've got Qualls, and we've got Bowman. I think one of them's already been out because I noticed a comment earlier. Then he's back again tomorrow. Then there's more FOMC people. So clearly, they're up into the media, and you know, if you know what's going on the cross market side, you will know that bond yields. You know, everyone's worried. They're worried that inflation is they're not going to be able to control it. They're not going to be able to keep a hold of what the bond market is saying. And every time the bond market, the yields go up, you will find that the dollar will go up as well. But the dollar's also going up possibly because of a short squeeze. Right, getting back to my profile for cable. This is what cable looks like: daily, hourly, 15-minute, 5-minute. And my Renko, and I just expand the Renko, and this is what I mean. This, you know, we've had this sell of the pound, and this sell here came in at this point on the Renko, and it actually corresponds, if we see here, with this shooting star. This was the London Open, as usual, lots of volume coming in, up it goes, into consolidation. But this is a really nice, strong signal, classic signal, VPA signal. This is a weak candle, whether you use volume or not. When you see a big shooting star like that, you know there's weakness going to come into the market, and it certainly did. But it's choppy, it's horrible. And if we think back to what we saw on the CSI, because they're moving in the same direction on the slower time frames, it's kind of what we would expect. And it looks like we're actually going to get a reversal now off this very key R3 level. As you can look back over to the left here, support and resistance, hugely important. No matter what methodology you use, if you incorporate support and resistance in some shape or fashion. We just use price-based support and resistance, and we use volume-based support and resistance. But we see here we've got this reversal coming up on the faster timeframes. But if we compare, let's have a look at the hourly chart where we are support levels. You must always check what's happening on the slower timeframes as well. Now, what's interesting about the slower timeframes is obviously the news that's come out overnight that kind of spooked the markets when they opened last night, was that Erdogan in Turkey has actually fired his 4th central bank governor. He's very careless with governors, isn't he, David? You know, it reminds me of that Oscar Wilde play. But this is his 4th firing, if you like, in I don't know how many years. So, I mean, obviously, if you trade the Turkish lira, I know most traders don't, because it is very, very volatile. It's an emerging currency, emerging market currency, so it has a much more volatility. But if you were, this is the kind of information that you would have as part of your just general knowledge about the currency that you are looking to trade. So that is this gap down that we have in the market, and we see this gap down in the Aussie pairs as well. But what's interesting is the gaps tend to get filled. We had a little hammer candle coming in here. The buying has come back in to the pound, and we have this volatility candle here. This is from last week. And it's interesting, volatility candles are when the price action is outside of the average true range, and of themselves, they then give us more key levels of support and resistance. And it's just interesting that it just managed to get beyond this level here. The buying came in. So in essence, the pair is actually still trading this level and this level, as well as the price-based levels and the volume-based levels. This is actually quite an important level for cable. Now, so that's what was happening on cable. We could see that cable was being sold, but of the cable pairs, it's really the pound Swiss, which, there we are, just waiting for that too. And this is what we really want to see. If we want to see a move, we want to have seen some really nice divergence, first of all, in the individual currencies, some strength moving in one direction, and an equal application of that strength. In other words, strong buying or strong and strong selling, because that is what will produce the smoother trends, and trends that are really going to have a bit of momentum behind them. And that is what we have seen with the pound Swiss, and that is the move, as I said, that has been here from this morning. It looks as though it's going to, it's a bit of consolidation. It's got a little bit of, a pullback coming up. And the good thing about using a Renko chart, which is not time-based, it's simply one of these little bricks, or it looks like candle, but it's actually a brick. That's what Renko means. Only posts once a certain number of pips goes through the market, and this is set at 3. And this is what you want. We kind of get a nice, you still get your patterns that you would see on a candle chart. You won't see wicks, but you could say, well, that's a double top. That looks like a double bottom. It also hits a key resistance area. This is the R6. The Camarilla works that on a daily basis, you get daily values, and so these are refreshed once you have rollover. The hourly chart is really important because those values stay there for the rest of the week, so you combine the two together. So on a daily chart, if you get a price approaching a level on the daily chart which coincides with a strong level on the hourly, you can bet your bottom dollar that is actually going to have an effect, and usually does actually reverse from there. But we've kind of got a double top there. I got a little trend dot here. This is very, very close to the market. This changes first. It will always change color first. Then you will get a color change in the trend monitor, which is always moves a little bit more slowly. You get this in between color. Now, depending on how you are as a trader, in the sense that are you happy to go off maybe a signal, how much of a confirmation do you want on your signals before you take a potential trade? Will depend, that's down to you. That's down to your personality. And I want to go through personality, and I'm going to go through that after David has got a couple of things he wants to show you, because I had a really interesting question from someone about VPA and how it works, we know it works, and he was, you know, been doing well, and yet he makes profits and then he loses the profits. And that brings me on to the psychology of trading anyway. And it's also linked to what kind of trader you are, and making sure that, you know, your trading style and approach actually matches as close as possible to the type of person you are. And I'll talk about that later. So anyway, so that changes. We will know that we have got the potential of, you know, more confirmatory signals is when you get a match of the bright red and the bright red down here. But that's for entries. What Renko also does, helps you keep you in. Now, it also helps you with exits. And this is where for exits, I always think it's where the time chart can possibly help you. It's a little bit more, you can, you know, you could wait. The key here is to say, well, it's in a bit of consolidation. The bricks have changed color. The dots haven't changed color. This has certainly not changed color. It's got to the S6, so that's got a bit of resistance there. And you know, so you could say, well, you know, it hasn't transitioned back to either the intermediate blue or certainly not the bright blue, but it's hit this S6. And if you've caught most of that, you look at this, and what do we have here? Well, we've got a bullish engulfing candle. Yes, it's up at the S6. Is there more buying? We've got a wick to the bottom of this candle. Let's have a look at the volume underneath there. Yeah, there's a sort of reasonable amount of volume under there. So you could say, so despite what you may see on the Renko, you might say, do you know what? I think I'm gonna go out. And in fact, as I've been speaking, we've got the intermediate color coming in as well. So what I've tended to find is, by all means, use, you know, the candles on the time chart, but certainly for entries, it's, you know, I tend to sort of more bias towards the Renko, certainly for keeping you in. But when it comes to exits, I find moving over to the time chart, because you can always go back in if you've got multiple positions, take them off the table, and as I said, and you know, you've got your profit, and leave one or two just to run and just see what happens really, and you know, and that's it. That's all I've got to say. We've got volume support here, which is from the volume point of control. Right, I'm going to pass over to David, and as I said, I'll keep an eye on this because this looks quite interesting. Let's see if actually if cable has what's happening with cable. There we are. Let's have a look, because that's where we started with. Whether we've got a reversal going on in cable, we'll see, or is it going to be stuck? As I said, if we do get a reversal, because we've got the R3 coming up here, this could be the range for the next sort of hour or so. So you think, well, I'm going to hit a key level on the hour. You know, is it worth taking a few pips? Depends. If you are, you know, if you're happy with a few pips, then, you know, but that's a decision only you can make. If you've got questions, pop them in. If you've got questions, please pop them into the chat box. More than happy to answer them. I'll pass you over to David.
Hi, everybody. No, no, Anna said I can't hear me. Well, it's probably best actually after my singing. Apologies about that. Yes, I know. The only reason I was singing that song was because it happened to be on Radio 3 just before we came on air. And it just reminded me what a great film that is. And there's some great lines with Rex Harrison and who's the dustman in it? Darling? Yeah, who's the dustman, the actor? Who plays the dustman in My Fair Lady? Stanley Holloway, just brilliant, great film. Anyway, apologies about that. Sound of Music is also another favourite of mine, but I won't sing you that either. Right, let's move that out of the way. Drop down out of the way, there we go. Okay, there's some really nice setups coming along because this is on the slower time frames. I haven't dropped down onto fast ones, although I've got the faster ones here. This is on Aussie Yen. I've had a nice little reversal. The reason we've got the reversal going is because up here, this is on 60 on the CSI. Got a really nice selling of the dollar. We've got selling of the yen coming in. It's curious because we've got buying of the Swiss franc, but I'm just concentrating on these two, the yen and the dollar. And the commodity currencies are starting to kick up. Canadian's already up there, but the New Zealand and the Aussie are already starting to kick up nicely. As you know, I'm always looking at the extremes. and that's what I'm looking for longer term. So that's on the 60-minute. I've got the 2-hour and the 4-hour over here on TradingView. I'll pull that over in a moment. But just to get a fix on, where are we? Here we are. Sorry, I've got so many platforms open here. Just to get a fix on sentiment, let's have a quick look at the what's going on in terms of US markets. Here we are. This is on Globex. This is the YM, this is the NQ, and this is the ES. So we've got the 5-minute there, and this is on the dailies down here. A couple of days of selling, and we're now looking for a bounce, which we're certainly seeing at the moment. As I say, this is 9:15 through to 11:15, so we've got a couple of hours of window up here in terms of what's going on. Had a volatility trigger there, so we've got a bit of congestion building, no great surprise. No volatility on the NQ, and a volatility on the ES. So we've got lots of volatility there. Expect some congestion. But in terms of the way things are going at the moment, and certainly if I look at I'll just pull the trading view over for a moment. There we go. This is on 4-hour. Sorry, this is on 2-hour now on the CSI. So we've got the yen is right up at the top there. Brilliant. Love to see that. So I want to see some heavy selling of the yen coming in. The Aussie is down here at the bottom, hasn't started to kick up yet. The New Zealand has just started to turn, and the Canadian is in the middle here. But basically what we want to see is all those three rising, the yen falling, and also the dollar falling with it. So that would create a nice setup. Now, just to show you this is UK 100 to FTSE 100. Just pop that up full size. Fantastic open. What do we get? Bang. Why did we get that? Because overnight, if you were had the screens up Sunday night, you would have seen it was a gap down open, pretty much universally across the markets, largely based on the Turkish situation and also some of the vaccine wars that are going on at the moment. So that's all combined. But as we always say, gaps get closed. So don't jump into gaps thinking, oh, great, it's gap down or gap up, this is going to carry on. If it happens anywhere near the open, you can almost be assured it's just a trap move, draw traders in on whatever the news may be, and then that gap is going to get closed. Exactly what happened here. This was 8 o'clock UK time, bang, down it goes, big volatility candle, no great surprise, reverses into that, another volatility, congestion, and now we're carrying on higher, and the trend monitor is just supporting that move. So the bullish sentiment is returning in terms of equities at the moment. So there we go. We're starting to break away from that now. And obviously, if that continues, then we're going to see continued selling of the dollar probably, and certainly continued selling of the Japanese yen. Just staying with this platform for a moment, let's go up to the currency majors matrix, because this gives you a straight through view. In fact, let me go to trading view, because that's probably better. Give the same thing on futures. Oops, apologies. Where are we? Where are we going? Come on. There we go. Right, this is on TradeStation. This is TradeStation driven by Interactive Brokers, the IB feed. So if you have an Interactive Brokers account, you can hook it straight through onto TradeStation. We've developed all the indicators here, pretty much all of them. The radar screen on the left here, we've got the Aussie dollar at the top here. This is futures, remember, so the dollar is always the counter currency. So we've got Aussie dollar, we've got pound dollar, this is CAD dollar, not dollar CAD, so it's the inverse, it's CAD dollar, Euro dollar, New Zealand dollar. So basically what we're looking at in this window, where we've got the trend monitor with the trend line, and on the right hand side we've got the trend dots. What we're looking at is basically on the radar screen, which gives us a great view in terms of whether sentiment is universal towards the dollar, and certainly is the one that stand out at the moment, as you can see here just by straight eyeball, is cable. Cable is not following the general pattern. What's happening in terms of Aussie, in terms of Canadian, in terms of Euro, in terms of New Zealand, those are all being bought and the dollar is being sold. But in terms of cable, that's not the case. And you can see over here, certainly on the faster timeframes at any rate, part of the reason for that is the pound is kind of moving lower, but the dollar is also moving lower with it, and therefore you're not going to get the strongest trend. You might get weaker trends, but you're not going to get the strength of trend, for example, you would see in the Swiss franc here, which is rising very strongly against the Japanese yen, or indeed any of the others. But what this window gives you is just a straight perspective on the sentiment across the market. These only go down to 15 minutes. And what you'll see, obviously, you've got the trend monitor here, which gives you a view on the sentiment there, what it's done. You've got the trend dots here, which are backed up with it. So obviously, remember, the trend dots always change first. The trend monitor transitions more slowly. but essentially that's what it's telling you right now. And what we've also got down here on the right hand side, I've got the volatility indicator on here. So you can literally click on any of these. This is Aussie dollar on 5. So if we click on that one, this is over here on the 5 minute, already had it set up. But you'll see this is where the volatility trigger came in. Just pop that up full size, make it easier on the eye. There we go. This was the volatility trigger here 4 bars ago. Ton of volume coming in into congestion. Is it going to continue? It looks like it. Why? Well, we had this little down candle here, decent volume under there. So we've got some buying coming in under there, and it's looking as though it's going to push higher and try and push out through the top of the volume point of control on 5. So you can scan up and down this very quickly. We can go and look at the euro here on, this is on 3 minute. So we're now looking at euro dollar on 3 minute. Where do we have a volatility trigger? Well, we had one 7 bars ago, which is that one. So we pop that up full size. And again, we just get that, instant view. Where are we? Went through a low volume node. We had a slightly increased volume here. We're now moving up into a low volume region here. The trend monitors kept us in. It's remained blue throughout this phase of price action. We have the trend dots here. You can see them rising. They're underneath here. Then they go into the spread of the candle. They come out the top. They change color here to white. They're starting to push down on the candle, but there's actually nothing changed on the trend monitor whatsoever. Then they go into red. Then they move to the underside of the candle again. And at that point, the trend monitor does start to transition. It starts to change into a darker blue. In other words, potential through to dark red and ultimately out the other side into bright red. But it doesn't get any further than that. And in addition to that, the trend dots then come to the underside. They're starting to support the price action, push up, push up, push up into volatility, a little bit of congestion. We're out the other side and on up we go. Volume's fine. We had a big injection of volume under there, so the market makers are in that particular piece of price action. Pop that down there. So it's just a great way of scanning. You can see here on the pound, we've had a volatility trigger there a couple of bars ago. Where else have we got one? Down on here on New Zealand, if we just click on that. There we go. Oops, sorry, cancel off that. There we go. So this is now the New Zealand future, New Zealand dollar. That's the volatility trigger. Just pop that up full size. There we go. Into congestion, it looks as though we're pushing out the other side. Exactly the same principles. Trend monitors blue, into darker blue, hasn't gone into red, and yet the trend dots have. Now they're coming out the other side. They've changed color again, and they're pushing up, pushing up, pushing up. Yeah. Let me just pass back to Anna from. Oh, okay. Hold on a minute. Just going to switch off for a moment. Do you want me to change platforms? I didn't. I was primarily on the ends. Hold on a minute. Let's just drop that out of the way. I can change this to pound Swiss. All right, CHF. There we go. Okay. So this is now on, I've got this on CSI on 15. So if I was looking at this for potential reversal, pound's very oversold, starting to kick up. Sorry, I haven't got these linked, apologies, or I've got them linked to something else. Sorry, I'm on the wrong, apologies, I'm on the wrong workspace, apologies, wrong workspace. Hold on a minute. Just go on to the one I'm meant to be on, which is that one. Right, there we go. Sorry about that. Okay, let's just change this over to pound Swiss, then that'll all change over. There we go. Okay. And if I change this down to a different time frame, which is a bit closer to that, let's change this down to, I think that was on 5 maybe. Let's put it on 10. Okay, there we go. So as you know, my eye is always drawn at the top and bottom here. So we've got the Swiss franc up at the top, we've got the pound down at the bottom, so a potential reversal. And someone made the comment, I think it was last week or the week before, and says you've got to be brave to trade reversals. There is a grain of truth in that. I wouldn't say you have to be brave. You've got to be you've got to be more patient, and you have to set wider stop losses for sure, because I can't tell you right now when this is going to happen. The pound may sell off further, go down here, could go down, even to this level. Could stay here for the rest of the morning, could stay here for the rest of the day, for all I know. But at some point, and the same is true of the Swiss franc up here, but at some point that will start selling off, particularly the Swiss franc will start selling off, particularly if there is a strong shift in sentiment In other words, if equity markets continue to rise and you see continued selling of the dollar and continued selling of the yen, then at some point that currency will sell off for certain. So you do have to be, I suppose, a little bit braver in the fact that, I suppose in the sense of trading against what has been the dominant trend. You look at this chart, for example, you know, that buying into that market doesn't cause me any great fear at all. But I can understand perhaps if traders will look at that and think, oh God, I have this great long, you know, slide down here and it's probably going to go off down here somewhere and I'm really not comfortable buying into that. Well, yeah, I can understand that, but then you're looking at it from the perspective of volume, you're looking at the perspective of the indicators, you're looking at the perspective of support and resistance, all manner of different things, and you're also looking at the perspective in terms of sentiment as well. So it's not just a case of looking at one chart and saying, oh, I'm a bit frightened of jumping in there in case it, you know, carries on and I lose a bucket load of money. But you do have to be patient and you do have to set wider stop losses. I mean, basically what's happening at the moment, we've got there's a little bit of a reversal starting to take shape. You've got the trend monitor here in blue on 15 second. Bear in mind, it is 15 seconds, so it's pretty darn quick. Up onto 1 minute, we're starting to break away from the volume point of control here. Just refresh this one. Come on, come on, come on. There we are. What do we have on 3 minute? We had a nice volatility trap. Great, okay, so we're looking for reversal off that anyway. Which is what we're starting to see. Trend monitor hasn't really done very much there. It's still red, certainly over on the right hand side, and you wouldn't expect to see any changes down here either. And that's just the nature of the beast. So yeah, it's shaping up, you know, to potential reversal. But if you're only a scalping trader, you know, there's plenty of fat in there that will keep you happy. Where's this gone from? 23 up to 39. You know, it's not a bad move. Held in by the trend monitor there, you know, hasn't shifted. We have this congestion around the volume point of control, which is what you expect to see, up through this low volume node pretty rapidly. Decent volume under there, that's fine. You know, and now up near the top here into a low volume area. Move up onto the 1 minute. What do we got ahead in terms of the 1 minute? Quite nice actually. Nice volume on that candle, excellent. Price and volume in agreement. Price and volume in agreement, hasn't gone anywhere, but then the volume's low anyway, so that's in agreement. Apologies, hold on a minute. Sorry about that, someone on the cell phone. Then we've got a low volume area here. So we would expect, all things being equal, for this price action to move through there pretty rapidly. Higher volume here, but nothing like the volume over here. In fact, it's gone off the side of the screen, there's so much of it. There we are. So whilst this is low volume, this is also, although it's higher volume, it is comparatively low volume when compared to this volume. And once we come out the other side of that, then obviously the volume falls away. So in terms of you know, what's ahead of us in terms of a move to the upside and where that is likely to take us, then, you know, it's pretty good news. No change on the trend monitor here, as I said. Low volume node here, so you'd expect the price to move through there fairly rapidly, but then you start to move up into this wedge of price here, which is where you've got some pretty serious volume sitting there. So in terms of the extent of this particular move, from 38 up to 55 and 60, you're looking at basically something like 20 pips in there, which should be relatively straightforward before you start to hit into anything which is going to cause you serious grief in the market to congest, which will be around this area here. So that's in terms of volume. In terms of price, very little price resistance, very minor. That's only been tested once. This has been tested a couple of times. That's stronger. You can see it capped off this little rally here. So there's a stronger area there. But in terms of the looking at it from a trading opportunity, certainly from a scalping perspective at any rate, you know, you've got roughly 20 pips in there. If 20 pips is enough for you, don't know what the spread is on the pound Swiss at the moment. It's certainly going to be 4 or 5 pips at least. So you're carrying a heavy load to take 20 out, and you probably wouldn't get 20 anyway. So, you know, that's the sort of judgment you've got to make when you're looking at a move, and whether it's going to be worthwhile or not for you. Pound is starting to kick up here, starting to see it here. And what you want to see in conjunction with that is you want to see the green line, the Swiss franc, starting to kick down. Let's just pull the trading view over again for a moment. Yeah. that's where we are in terms of the UK 100 at the moment. Just drop that out the way. I've got pound yen up here, I've got Aussie yen up here. Just keep an eye on that. But you can see it's starting to curl. This is on the 2 hour now. Yen is starting to curl over. Dollar's selling off quite nicely. New Zealand dollar is kicking up. So New Zealand dollar would, I beg your pardon, New Zealand yen or New Zealand dollar would be a pretty good call right now. And the Aussie is not yet moving, but nevertheless, you know, it's trying to follow the same pattern as all the others. What I've also got on here is, and I've done some videos on these, so you might have seen them on the YouTube channels. These are the indicators. They're not available yet, but they will be within the next few weeks. I know you think, well, you've got them here, why can't we have them? And the simple answer is, first of all, we have to test them. Then we have to build them with the software obfuscation, which actually secures the code. Then we have to load them on the site. We have to create the products on the site with all the pricing, and we have to also do all the support pages that go with them. So there is a lot of work from what you see now to actually a point where we just load them up on the site, and you can actually include them if you have the set and you get them for free, or if you're purchasing them. So apologies, I know it seems like a long process, but it does take a long time from you seeing it to us getting it up on the site, and that's what we have to do. And it is a lot of work. It's a huge amount of work, and it's part of the reason that TradeStation took so long, because there were so many indicators to code, secure, create all the support pages, test, and everything else. This is the currency array on 15. This is the matrix on 5. And the big difference on the matrix, as Anna highlighted earlier on, is this figure here. Sorry, just pull that over a little bit if I can. There we go. We've now incorporated this onto a TradingView, and we will try and do it across all the other platforms in due course. But essentially what it's giving you is in exactly the same way as you see on the CSI, where you have the lines that tell you or give you a guide as to whether a currency is overbought and oversold. Similar situation here. Now we're talking about currency pairs. So we have an all-time high here of 20 at the moment. We're currently at 12.9 for euro dollar. So we know we're way off the all-time high, and we're also pretty far off the average. The average is around 15. So just looking at that in a very simplistic way, it gives you a feeling of, well, we were at 13, so we've got a little way to go to the average. We've got a long way to go to the all-time high, if it's going to get to the all-time high. It just gives you a sense of whether this value here is high, average, low, and the conclusion from that then is, well, you know, have I got more to go in terms of where this currency pair may get me to in terms of whether it's overbought or oversold? Exactly the same at the bottom here. The bottom is more clear because we've got an all-time low of 10.8, so pretty much there, and we're over the average of 8.5. So we know that the dollar Swiss, dollar yen, dollar CAD are probably, you know, or certainly the dollar yen and the dollar Swiss are getting towards potentially overbought and oversold situations. And in terms, obviously, the currency array, what we've taken that a step further. Not only do you get the strength of buying or selling for each of the 28 currency pairs, but you also get the overbought and the oversold ranking appearing down here, and they appear in brackets for getting to an oversold, overbought condition, or they appear as bright red, bright blue with OBOS without the brackets, in which case they're at an overbought and oversold condition, in which case it's off to look at the chart. Now, the difference between these two indicators is currency matrix works very close to the price action. It's exactly the same as I was showing you with the trends and the trend monitor. As you can think of it in exactly the same terms here. Currency matrix you apply to all the charts, very close to the price action, and you'll see these moving up and down pretty rapidly. The trend, the currency array, on the other hand, takes a more considered view of looking at overbought and oversold conditions and the strength of trends and everything else. So you use the two of them in tandem in exactly the same way as you will use the trends and the trend monitor in that way. So the currency matrix very close to the price action. You could say almost it's a scalping tool, if you will, whereas the currency array is a much more considered, and it's a little bit slower in terms of the way it views changes in trend. It also gives you, obviously, in exactly the same way the matrix does, it'll tell you about this sentiment across the matrix. In other words, is the market per se buying or selling dollar? Is it buying or selling yen? Is it buying or selling pound? Because you want to be trading with the universal flow of what the market is buying at the moment. There are occasions when you can go against that torrent of flow and trade in the opposite direction. And that may be for political reasons, it may be for legislation issues, it could be anything. But generally speaking, you want to be trading with the universal flow. If everyone's buying the pound, you want to be buying the pound, just choosing the pair. Yeah, very quickly, this is, yep, okay, all right, hold on a minute, I'm just going to switch over.
You can all see my screen. I know David can, so I was pretty certain that you can as well. Right, really interesting. What I want to I've actually come back to cable because I want to, a couple of things I want to highlight, which are really, really interesting. As we looked at it earlier, and it was all a bit messy, and on the hourly chart, it was because they were moving in the same direction, the currencies, and I said, well, you know, there is some strong selling in the pound, but you know, the dollar was being sold at the same time. And we looked at the hourly chart. I'm going to look at these charts first. And what I said was, one of the reasons is we talked about volatility candles giving us an additional set of support and resistance levels, or zones, if you like, to take account of, to pay attention to on the chart. And we can see here that the price action is within this volatility candle, and that in a way also it has its own influence on what you will see on the CSI. And the other question obviously to ask yourself is, you see a move, you're in a move, and then obviously you want to know, well, where is it going to? This is where support and resistance comes in, and at least you have to have some kind of objective, some kind of target. And it's interesting that the top of the volatility candle actually coincides with the R3. Now on the Camarilla indicator, the Camarilla protocol per se, on which this is based, the third level and the fourth levels are probably the most important. Anything between the R1 and the S1 is what's known as a buffer or a neutral zone. You often find that there is congestion, and we can see here there was congestion because when these lines move in the same direction, there is congestion as well. So on the slower time frames, we've got some indication of if this is going to carry on higher and the volume comes into it, although, you know, what's the time, you know, it looks a bit be below this median line here. We're actually at the R2. I'm not saying prices don't stop at the other levels, they do, but the most important ones to consider are the 3 and the 4. With this indicator, you actually get 6. So it's the way we've coded it. And obviously these are levels on the slower time frames, so they're going to be quite important. Now, going back to an even slower time frame, when we look at the daily chart, one of the features that should strike you immediately about the daily chart for cable, that is actually trading in a range. It's in congestion. We know it's in congestion because it's around the volume point of control, which is this yellow line here. This is volume and price over time, and it's kind of spending quite a lot of time in this area here. And what you have is you know, it will break away, perhaps then it will come back and you know, go back into towards the volume point of control. The other thing to understand about the VPOC is it's the area on the chart, it's a fulcrum. By that we mean it's where there's a degree of price agreement, so there is no strong divergence. You need divergence to create a trend. This is a trend. We had a little bit of consolidation there, then we had, now this is a trend without volatility, in the sense that we don't have any volatility candles, but neither do we have strong pullbacks and corrections. It's fairly sort of steady and solid. And when you have price action that looks like this on the daily chart, on the faster time frames charts, you can kind of say every pullback is probably an opportunity for a buy. You know, there may have been opportunities to sell the cable on this day, on this candle here, but in generally, you know, everything was positive for cable. And of course then we had a classic candle, which is a shooting star, and we had the start of the reversal, but the reversal has gone straight into almost into a consolidation. But what's important about this chart is that where the volume point of control is, which is at 39.04, let's say 39, nice round number, if it's going to carry on higher, this is probably where it is going to be aiming for. And how far away is that? Let's have a look. Some distance away from the R3. Let's have a look. Just double check if it brings it up. We are 38.89. No, we're slightly off it. But do you see how you can, you know, by looking at the levels on the different time frames, even if you're trading down here on the faster time frames, will give you an indication of where this price is likely to go. Move this out of the way. There we are. Now this one, this is where we have patterns again. Look at where this this bounced off. It bounced off the R3. What did I say about the third level? It actually got, this is the volume point of control, straight down to the R3. We get a 2-bar reversal, and this is the reversal that we have seen that David was talking about up to the volume point of control. Where's it, if it gets through the VPOC, where's it going next? Because we've actually gone through all the 6 levels, and that happens sometimes on the faster time frames. If you've gone through all levels, that's why we've got different values for different time frames, because it allows you to say, well, okay, well, I've chewed through the levels for today on the daily one. I will now go and look at a slower time frame. So let's have a look up here. It will certainly get, if it gets to here, 39.81, pretty much what it is on the R3 on the hour. So that's how you look at multiple levels. And checking back on the Renko is going higher. But you notice it's really not, you know, it's not smooth, as it were. And about trends in the program, we do explain, you know, there are trends with volatility, there are trends with, you know, smooth trends. You know, there's congestion with volatility, there's congestion without volatility, and this is what you will learn in the program now. So while we watch that and see whether it actually gets to the levels that we discussed on the shortest time frame here, where's this aiming for? Again, this is the level based on the VPOC on volume, and the level here, it's already tested it once, as we can see, and it's actually pulled back. So it's what Gann called wheels within wheels. So each cycle of price action is a standalone cycle, but that cycle is then within, it's a smaller version of a bigger cycle. So it's a wheel within a wheel, and you have to learn to recognize where at some point in the different price cycles you are going to get a confluence, and when you get that confluence, that is when you will either get a pause or potentially a reversal. Now I'm just going to leave this on in the background, and what we're going to do in these sessions is, I have so many emails. I mean, I think one week we had 200, David? Yes, as you can imagine, they are a little bit overwhelming. It's great to hear from traders. I have to say, the vast majority of them are simply saying, oh, thank you for the book. It's been fantastic. It's really, I can't believe, you know, how much it's opened my eyes to what is actually going on in the markets and on the chart. But I had a really interesting question, and that was from someone who actually bought the book two years ago and does very well, you know, understands the methodology, makes money, but he makes profit, and then that's it. They disappear. It's almost like a self-sabotage. And I said, well, you know, well, what can I do? One of the things we do in our program is absolutely focus on the psychology of trading. And unfortunately, a lot of traders don't think about the psychology of trading until they hit a problem. You know, they go for therapy when there's a problem, but actually you should start first. And there's all sorts of reasons why. One of the psychology, how we have structured the module, is to look at what we call trait theory. Now, trait theory is based on the premises that there are 5 big general personality traits that everybody in the world has, and we are all on a spectrum of the individual traits, and obviously we're all a mixture of, you know, where we are, and then we have influences from our genetics, if you like, and our family backgrounds. But one of the most interesting traits is the trait for neuroticism. Now, it's not being neurotic. Neuroticism is your ability to withstand, to cope, to deal with emotional upheaval when you're faced with an emotional situation. And it's a spectrum. You have to remember it's a spectrum. So obviously there's an extreme, and most people it's like the bell curve. Most people sort of sit in the middle, but they have extreme. And it's really important to know because it has a direct impact on, first of all, knowing about yourself, but secondly, it also has an influence on what you're likely to feel comfortable with actually as a trader, because what you might think you should be trading could be not what you should be trading, because actually it's causing you, you find it painful. And if you think about it, the markets are all about emotion. We talk about sentiment, but this is about emotion. This is fear, greed, euphoria, complacency, call it what you will. That's all financial markets are, looking for reward and risk, and that's it. So understanding where you are. So how does that actually impact, how would that impact you as a trader? Well, if you take myself as an example, I know my scores, I know what I am. I actually score quite low for neuroticism. Things don't upset me, despite being an Italian. I know David finds it difficult to believe, but I'm actually quite stable. I don't panic and what have you. From a trading perspective, you would think, oh, that's great. You don't panic, you sit there and you absorb it. Actually, as I said, there's no good and bad. What it can make you is it can make you be too relaxed and not necessarily, step in early enough to think, what, this is it, come out. Sitting here in front of a screen and looking at a drawdown and look at price going against me, it really doesn't bother me that much. Now, you could argue, well, sometimes it should bother you. So that's one thing. If you're at the other end of the scale, obviously you're much more anxious. You find it difficult to deal with emotion. So how would you, if you were to score on the top end of the scale, what could you likely to do? Well, the way I look at it is, first of all, it's great to know that that is part of your personality. Then I would say it comes down to sort of time frames. If you are at the top end, and things can make you jittery, I would suggest you really don't want to stay in the market too long. You've got to stay out of the market, go in for as long as you feel comfortable, and whether that is the 5-minute chart using a Renko, be very, very restricted in your time frames, and come out, make it and come out, because you can work on these trades. They're not set in stone as it were. It's just to explain to you what it is that how you are likely to react to a certain situation. Now, getting back to this question, what do you do then if you've worked that out, but you still self-sabotage? And the easiest way I think to do this is, if you are profitable, if you have an account, 500, 1,000, 2,000, 3,000, and you have some profit, have an account that is a base, that it never, I know it might sound counter, but keep it to a level. Don't let it, if you're successful and it grows and grows and grows and grows, sweep it, move it away, and keep it to a level that you are not going to blow up. And that genuinely does work. Secondly, position sizes. I suspect, and this is just my own interpretation from other people that we've spoken to and emails that we've had, sometimes when you do have a run and you are doing well and things are going well, and you think, and maybe you've been trading small size, you look back and think, do you know what, if I had been trading in bigger size, I would have made so much more money. Well, yes, you would have made so much more money, but you could have lost so much more money. And that is, don't be tempted to suddenly scale up. Don't be tempted to go from a micro to a mini to a full lot. The danger is to say, right, because the other thing you have to bear in mind is the purpose of scaling up obviously it is to make more money, but actually you don't want to stay in, you don't actually want to stay in the market too long. You want to get in there. You know, that is the one way you can make money, but you have to time it in the sense of how long you stay in the market. So my advice is know about yourself, know where you are in terms of how you respond and react to the emotion that the market throws at you. Find, make sure that the style that your approach in trading in terms of your time frames and time in the market is kind of consistent with what type of person you are. If you're not happy with that, then you've either got to change the time frame or do some work on yourself. If you are prone to self-sabotage, how do you do that? Is it because you're scaling up in terms of size? Or you know, do you just say, oh, you think you're the, you know, you've cracked it, it doesn't matter what you do, and you kind of forget all your money management and risk money management. It's very easy to get carried away with your, you know, with success. You see it in sports teams and what have you. So it's a perfectly normal, natural human reaction. Right. I've explained a little bit about the program for those of you who may not have come across it before. I'll pass over to David because he's actually got the details, and we can see here with cable again. I would call this trade is a grind, but you know, we know why it's a grind.
Thanks, darling. Just move that out of the way. There we go. Move that down. Back on NinjaTrader, just a couple of things to say. The Aussie yen's moving nicely. I said if the yen's selling off, it's selling off nicely, and the dollar's falling as well. So really nice trades here on the Aussie, on the New Zealand. Really spoiled for choice. Pound's starting to kick up a bit, and you can see here the Swiss franc is still up at the top there. Hasn't actually rotated yet, so you know, just have to wait and be patient. But really nice trades on the yen pair, certainly on the faster time frames, and shaping up nicely on the slower time frames as well. Just picking up on what Anne was saying about how to move up through from the starting point in terms of micro lots. I actually got pretty cross with someone on the program because it is very. I do get cross from time to time because it's very clearly defined. We give a very prescribed roadmap for where you start, how many micro lots you start with, basically one, and you work up over a period of months, and you gradually build it up that way. And I'm not going to name the person who it is, but you know, long story short, I found out they were trading on a 500 to 1 account, which was lunacy, and they were trading full lot sizes with an account size, I think it was about 2.5 grand, which is nuts, and totally bypassing our recommendations of how you should do it. So we can only put out there what you know, our 20 years experience of trading and what you need to do and how you need to build up. And that's a classic, because if you follow the roadmap, you will gain confidence, and confidence will build gradually. Like everything in this business, it's about a gradual process. It's not a one-shot wonder, and you know, you're cock of the north one day and down in the dumps the next. It just doesn't work like that. Very quickly, then we'll just wrap up on TradingView. Just pull this over. This is the currency heat map. The big difference with the currency heat map on TradingView is, as you can see here, these are all different time frames I've got now, all sorts of things over here. I've got different ones here. You can have as many of these running as you like. So you just set them up according to what it is you're doing. If you're a scalping trader, you might want to have 1, 2, 3, 4, 5, something like that. If you're a longer term, you know, you might be out to the 45 minutes or the hour, up to the 4 hour, whatever. It works in exactly the same way. Doesn't matter, has to be attached to the 1 minute chart. That's the only thing. But other than that, you then select precisely the time frames you want to run in the algo. And it works in exactly the same way. The currency pairs down here are weighted according to whatever time frames you've chosen across the top here. So in this example, the 30-minute will carry the greatest weight, the 2-minute the least, and therefore that will be reflected in the ranking ladder here. And of course, they'll all be different because they're all working off different time frames. Finally, just to highlight this one, which you may or may not have seen on the channel, I did put up a video, I think it was last week. This is the Accumulation Distribution Indicator. Just pop this one up. This is on pound yen on 15. Pop it up full size, there we go. This is very similar to the way the accumulation distribution indicator works on NinjaTrader. We've developed it in that way because we have the facility to do it on TradingView now. And basically what you get is this very visual perspective in terms of strength and weakness from a price point of view, of support and resistance from a price-based perspective, with these little tags which you can turn on and off. You don't have to have them on there. But basically what this is telling me is this one's been tested 5 times. This one up here has been tested 4 times. There's another one behind it. So this is a very, very strong region of resistance, which you can see is actually coming into play as I'm speaking here at 150, what is it, 75 odd. But if it breaks through there, if we break out of this channel, we've got a very strong platform of support below. We've got a very strong platform, ceiling of resistance in here. If we break out through here, then boy, oh boy, we've got a great platform in place for this to really take off and move higher. And of course, if equities markets continue to rise and the yen continues to sell, that should be reflected in terms of pound yen in due course. May not be the strongest, certainly isn't the strongest in terms of yen pairs at the moment. But you know, that's a great technical picture to be looking at in terms of a breakaway from congestion. And if you've got patience, going back to what I was saying about patience trading on reversals, if you have the patience to wait for congestion phases like this to build and give you these very, very sharply defined levels, because you know it's a no-brainer as to where you're going to put your stop loss in this trade. It's going to go underneath here somewhere, and provided this fulfills your money management rules of 20 or 30 pips on that trade, and given this is a 15-minute time frame, then you know that's probably not far off the mark. Then your stop loss is going to be under here somewhere, and you're going to be sitting on this great wedge of stuff above you, which is going to create a natural barrier to any reversal or pullback against the price action in due course. It's just a classical way to trade. It's just a great way to trade, but you have to have patience. You've got to wait for the breakaway, and what you're looking for obviously down here is you're looking for the volume associated with any breakaway to confirm that it is a true breakout and not a fake out. Let's just drop that away. There we go. Slide that back over there. Okay, New Zealand yen still carrying on higher. Really nice trade, nice and comfortable, not particularly scary. Nice easy money in there. Just know what's going on in terms of sentiment across the markets. Trend monitors blue right the way through, holding you in. You know, very straightforward stuff. Right the way down onto slower time frames. And just to finally wrap up in terms of the gap down, this was the gap down we saw. That was the gap open overnight. And it was pretty much universal, certainly across the yen pairs as well. And we've seen it across some other markets too. That gap is now rapidly being filled. And that's what I said to you. Be careful when you see these things, when you see gaps overnight, particularly over the weekend, you'll see a gap down open, maybe gap down up or down. Don't just jump in and think, oh, easy money, because gaps get closed all the time. Okay, let's just, where are we? Here we are. This is the education, quantum trading education program. It's called the Complete Forex Trading Program because that essentially is what it is. And I would say even more so now that we've got the funded program alongside it as well. That we rolled out about 4 months ago. We've had fantastic take-up. We've got loads of students on that, doing really well. It's great to see. And the reason that we put that in place, and basically what it is, you trade our money. You're not trading anyone, you're not trading your money, you're trading our money. So the risk is on us. It's as simple as that. You keep your money for your own trading account and you come and trade ours. There are various rules, as you would expect, trading rules and risk and money management rules within the program. But essentially, you start with either 5, 10, not sure it's on this page or on the next page. Sorry, beg your pardon. There we go. Let's go over here. Let's pop on that. Right. You basically start with one of 3 levels, either at 5,000, 10,000, or 15,000. We call it an evaluation account because that's what it is. You are basically proving to yourself that you have the consistency to trade at that level, and we set a very simple and achievable profit target for you to achieve, and you actually get rebated 35% of that. Once you move off these levels, we then multiply the capital by 4. So if you start with 15,000, you'll then be trading a $60,000 account, and the same principles apply. The only difference is we rebate at 50%, and you also you can also trade other markets. On the evaluation, it's spot Forex only and the 28 pairs. But as soon as you move to the portfolio, what we call the portfolio manager levels at 60,000 onwards, then you have the option to trade other markets. got it here somewhere or the other. Here we go. S&P 500. You can trade FTSE, Dow, Tech, DE, and gold. So it's there, and then once you move up to 60, you get rebated monthly. So your 50% profit return comes back to you monthly. So you're basically earning an income off what you're doing. And thereafter we double. So at 60,000, it goes 122, 44, 89, 60, on up to 2 million. And at 2 million, in the $1 million account club, we increase the profit return to 60%. So it really is a healthy return. But as I say, it's all without risk. There is no risk to you. You're not trading your money, you're trading our money. And in turn, the reason we bolted alongside was because basically we wanted to give our students on the program the opportunity to leverage their knowledge, because it's all very well having that knowledge, that expertise, but what you get with the funded program is you put that knowledge to convert to profit. And it also gives you the experience of managing much larger sums of money. You know, managing a $5,000 account, fine, but when you're managing a $60,000 account or a $120,000 account or $250,000, the rules and principles are exactly the same, or pretty much the same at any rate. But you've proved your consistency. So whether you're trading a small amount of money or a large amount of money, it really makes no difference. It's just the amount of money that's different, that's all. And you're trading larger lot sizes, obviously. But if you prove yourself at the evaluation stage, then you pass that level, and thereafter we give you much larger sums of money to trade. As I say, it's a comprehensive program. It covers everything. The psychology module is the first module we recommend you start with, because that's, as Anna said, that is where it's all at. You know, understand yourself, take the modules, take the tests, understand your strengths and manage your weaknesses. So play to your strengths and manage your weaknesses, as simple as that. Fundamental analysis, huge module. Relational analysis tells you about the related markets, how sentiment works. Technical analysis is a deep dive into volume price analysis, and the mechanics of trading is as it sounds. And then you've got all these videos underneath as well. There's about 450 lessons, I think, from memory, and there's over 250 to 300 hours of video in there. It's huge. And in addition to that, you'll also find Anna and myself over in the VPA trading room to answer questions or to help in any way we can. So we're there every day pretty much, as indeed are many of our other students who are also very helpful and very experienced, and will guide you if you're a novice. Absolutely no problem at all. It's a very friendly place, other than when I get cross, but I don't get cross very often, I can assure you. So there we go. Where will you find all the indicators? Over here at quantumtrading.com, MT45, NinjaTrader 78, TradingView, and TradeStation. They're all up there. As we've seen, we are working flat out on the TradingView indicators to get those across onto the package. If you have already that package in place, you've already bought that at the old price, then you'll get all these indicators free of charge, and you won't pay any more for them. Simple as that. So we'll just add them to your account. So it's not a bad time to invest in the TradeStation package right now, because you save at least a couple of hundred, if not more, on that. So that also applies in terms of if you invest in the full package with us on any of the other platforms, you'll also get all future indicators we develop free of charge. And of course, everything that comes along with 24/7 support and all future upgrades as well. You don't pay for anything like that whatsoever, or indeed for transporting your indicators from one platform to another. We never have and never will. So if you start on MT45 and decide you want to upgrade to Ninja, or you want to go to TradeStation, we just transfer them across for you. There's only a difference in cost if you're moving a full package from one platform to the other, or you want additional indicators that are not available on your package but are on the other platform, then you just pay the difference. As simple as that. But other than that, you don't pay anything to transfer across. Finally, you'll find Anna over here, annacooling.com, all the posts we do, all the analysis down here, videos, whatever, and all the books up there as well, all up on Kindle in both, all up on Amazon rather, in both Kindle and in paperback version. And I have to say, they are selling extremely well, so we're absolutely delighted, and also selling very well in terms of our regular publishers as well. Sorry, Don? Yeah, we're in Vietnam, we're in China, Taiwan, very strong in Japan, and we're always looking for European publishers. So if you know anyone in the publishing business, we'd be delighted to talk to them. Thank you very much indeed for coming along today. Sorry we've run over time, a little bit later than we expected. So apologies for that. Hope you've enjoyed today. We will be back at 2:15 UK time. US has already moved their time forward. which we are doing at the weekend. So the markets will be open at 2:15, whereas normally they're not. So we will be back at 2:15 UK time. Thanks very much indeed for coming along today. Hope you've enjoyed it. See you soon, and bye for now.